Are we or are we not?
John, there's a lot of talk right now, a lot of debate about a recession being just around the corner, or even that we're in one now, technically. What's your take?
Well, technically, we're not in a recession. I don't know why people think that we're in a recession. We're not. A recession is not defined by the common notion that it's 2 consecutive quarters of GDP contraction. Okay, we did have that, but that is not a recession.
He points out that the National Bureau of Economic Research, the agency that declares a recession, looks at other indicators and criteria, like job growth.
Just on a common sense point of view, how can you possibly have a recession when the economy is adding 500,000 plus jobs a month?
There's some debate right now about whether inflation has peaked. Do you think the highest prices are behind us?
There's a growing consensus now. Inflation has peaked. Commodity prices, copper, lumber, iron ore, wheat, even oil, they've all peaked in the middle of June, and they're all coming down.
John is the editor of the Power Elite and Weiss Technology portfolio. He says there's been a big change in sentiment for investors.
For the first time in 2022, stocks are rallying on bad news. When you see stocks rallying on bad news, that's usually the first indicator that you're making a bottom and moving higher.
He refers to companies that didn't meet their second quarter target numbers, but whose shares surged anyway.
Tesla, Microsoft, and Alphabet. They all reported earnings. They all missed their profit numbers. They all missed their revenue numbers, and the stocks all rose despite those misses. If it were in a bear market, if the sentiment was negative, those stocks would have gotten crushed. Walmart provided its Q2 numbers and a weak full year outlook. The company's stock fell 13% in a day. You have to understand that's a huge company. For it to drop 13% in a day is massive. But it recovered all the losses 4 days later. And when stocks will not decline on bad news, they inevitably move higher. It's hard to make the case that stocks are going to get smashed on lousy earnings when the opposite is actually occurring.
John sees a bullish future for certain tech stocks, like the high-end chip maker Advanced Micro Devices. AMD chips power Tesla's entire fleet of EVs, their media control units, and other smaller systems. The company is also finding new ways to sell its chips, as different uses for powerful semiconductors keeps growing.
For instance, it's helping hyperscalers like Google develop chips for its data centers. That used to be something that only Intel and NVIDIA were doing, and now AMD is doing it as well. The data center sales shot up 83% in the most recent quarter. 83%. In the most recent quarter, which was supposedly a recession.
He also sees companies in the biotech space soaring. DeepMind Technologies is a London-based artificial intelligence research company owned by Google. It just achieved a major breakthrough.
It has announced that it has successfully mapped out all of the known proteins using AI software that it developed.
The AI algorithms have determined the structures for nearly 200 million proteins. This new database is considered a game changer.
This is a hugely bullish story for biotech companies, which have been trashed for the last 12 years. It eliminates doing the most difficult part of drug development.
2 ways to get exposure to the sector: the SPDR S&P Biotech ETF, ticker symbol XBI, and the ARK Genomic Revolution ETF, ticker symbol ARKG. It currently trades in the $40 range, but John says could surge to $70 over the next 18 months. That would be about a 75% gain.
I think that biotech is going to be a big surprise winner over the rest of the year.
And he sees winners across industries.
The bottom line is that bears are losing the narrative because stocks are no longer declining on bad news. I think the economy is strong despite the Fed raising rates.
Meaning the Fed's so-called soft landing is indeed possible.
Senior analyst John Markman, it is always a pleasure to get your insights. Thank you so much for your time today.
Jessica, great to talk with you.